Hi, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended October 7, 2015, the conventional mutual funds industry saw widespread outflows in its biggest categories with the sole exception of money market funds. Let's take a look at our macro groups and see what happened. Well, starting off at the top, equity funds. Another week of outflows, $3.9 billion this week. Taxable mutual funds weren't a whole lot better, outflows of $2.3 billion. Municipal debt funds surprisingly showed up with about $528 million in inflows. And again, as we've seen over the last couple of weeks, investors continue to sock money away into cash products. Money market funds with inflows of $16.8 billion. Well, as I said, it was a pretty good week for equity funds overall. They were up about 4.3%. We saw the Dow Jones gain over 700 points for the trading week, so it didn't seem to make a whole lot of sense that investors pulled money out while the market was going up. Yet they did anyway. Domestic mutual funds saw about $3.7 billion in outflows, again led by large caps. They had about $2 billion in outflows. Non-domestic suffered a little bit, about $250 million we'll call it, which adds to $3.9 billion overall. Interestingly enough, some of those alternative products we've heard so much about, but investors failed to follow through on this year, were the week's biggest recipients. Short bias funds took in just under $300 million this week and managed futures about 231 for them. So overall, not a great week for flows anywhere you look inside the equity space, but mostly it was outflows if you look too carefully. The next group to take a look at is equity ETFs. They also had outflows this week to the tune of about $4.1 billion. I'd like to call this a risk-off week, but when we take a look at some of the categories, that didn't seem to be the case. We did see short bias take in about $649 million this week, but light flows elsewhere. The week's top gain was the Spider Oil and Gas Explorers XOP, which had about $303 million in net inflows, and that was the week's biggest gainer. Somebody's taking a chance on those beaten down oil and gas exploring companies. The MSCI Germany showed up on our week's worst outflows with about $376 million drained from that product. IWM, the Russell 2K, also had outflows. It was about $1.6 billion, a significant outflow for that fund. And the Spider S&P 500 followed with about $2 billion in outflows. So overall, when we're looking at equity products, pulling $4 billion out seemed to be like a way of investors taking some risk off the table. The next group to take a look at is taxable bond funds. Here we saw one of their best weeks in terms of performance in almost 4 years. Yet investors still needed to pull about $2.3 billion out of this group. Double Line Total Return Fund was the one of the best inflows of this week. It had about $384 million. That led to the U.S. mortgage funds category, in which it is landed in Lipper's classification system. Well, that helped U.S. mortgage as a classification lead all groups with about $448 million in inflow this week. High yield bond funds didn't do too bad. I'm sorry, they did pretty bad. $675 million pulled for them, despite having one of their best years in a long time. I'm sorry, one of their best weeks in a long time. 1.16% total return this week for high yield funds, yet investors still yanked almost $700 million from them. Loan funds simply couldn't find a footing this week. They didn't have positive performance though, so understandable that investors continue to pull money from loan funds. They've been disappointed with them all year long. Well, let's turn our attention now to fixed income ETFs. They had about $4.6 billion in inflows, probably one of the better groups this week in terms of inflows. The Spider Barclays High Yield Junk JNK took in about $1.2 billion this week, and this was double its next best week in history. So investors are very excited about junk bonds suddenly. Maybe that has to do with oil prices trying to find a floor above $45 over the last several weeks. This gave investors enough confidence to put their money to work there, probably related to the big inflow to the oil and gas explorers ETF we talked about a few minutes ago. Overall, the big picture here for taxable fixed income ETFs was that treasuries tended to find inflows, investment grade, short investment grade in particular, suffered outflows. Investors were definitely looking for a little bit of sanctuary in treasuries this week. Not too pleased with what's going on with corporate spreads at the short end of the yield curve. Overall, we saw the week's worst outflows belong to the 1 to 3 year treasury, 1 to 3 year corporate, $137 million in outflows for that product. Next group to look at is municipal debt funds. Here again, $528 million this week. They've had inflows for 2 of the past 3 weeks. They've had positive performance, though, for 9 of the past 12. So it's about time that investors started to find their way back into municipal debt funds. High-yield munis led the way, $239 million in inflows. This contrasts with short municipal debt funds and $27 million in outflows. So maybe slowly, as investors are coming back or changing their allocation, getting more confidence in munis, putting more money to work in the high-yield area, which has been a pretty good performer this year. The final group to take a look at is money market funds. Again, they were the week's top flows gainer among all asset classes, $16.8 billion. We can break this down into a couple of ways. We saw retail investors add about $6.6 billion, while institutions added $10.2 billion. Another way of breaking this down is we saw the tax-exempt money market fund groups take in about $3.7 billion. The prime groups, prime money market funds, take in $17.6 billion. But the government and treasury-related money market funds saw outflows of $4.6 billion. So lots of ways of slicing and dicing the money market fund data this week. Well, that will wrap it up for us this week. Join us next week where we'll tear apart the data behind mutual fund and ETF flows, or join us online at lipperusfundflows.com. We'll see you here next week. Thanks for watching.